In this video, I will teach you 4 trading strategies, and each trading strategy there will be special settings and adjustments and many important points that you must pay attention, so make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's begin with the first trading strategy. In this trading strategy, we have 2 indicators. To add the first one, here we click on indicators and we search moving average ribbon, this one, which is a built-in indicator on TradingView platform. Then we need to change its settings, so we go to the settings of the ribbon, and first here in the inputs tab we remove one of the moving averages, because in this trading strategy we only need 3 moving averages. The 3 of them should be exponential moving average, so we set EMA for them. And these exponential moving averages should have length of 96, so we set 96 for them. And finally here for the first moving average, here for the source of calculation, we set it at low. For the second moving average, we set it at HLC3. And for the third moving average, we set it based on high. Alright, we are done with the settings of the exponential moving averages, and now we should add the second indicator. Here again we click on indicators and we search FX Sniper T3 CCI. We add this one, which is written by H. Potter. Alright, this is the indicator and we need to change its settings, so we go to the settings of the indicator, and here for CCI period we set it at 35, and then here in the style tab we change the appearance of histogram to columns, and here for the colors we increase the opacity so the histogram will be better visible on our price chart. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. These exponential moving averages together created a band on the price chart that will act as a support or resistance zone. When the price is below the band, it will act as a resistance zone. You can see that whenever the price reaches to the band, we have stopping of the price and then declining. And on the other hand, when the price is above the band will act as a support zone. You can see that when the price reaches the band, we have stopping of the price and then advancing of the price. By the help of this trading strategy, we want to catch the turning points of the market where a reversal is happening on the chart. So we want to catch a reversal from uptrend to downtrend, or from downtrend to an uptrend. Let me show how you can do it. On this chart, I'm going to explain a short position setup and then I will explain a long position setup. As I explained earlier, this band will act as a support or resistance zone. In this part, when the price was in an uptrend, you can see that the band is acting like a support zone. It's a kind of difficult for the price to pass the band. So when the price goes below the band, it can be a signal that the market sentiment is changing. So it can be an opportunity to enter a short position. But we don't enter a trade only because the price closed below the band. No, if you do this, you will encounter many false signals. So there should be some more conditions that will help us to decrease our risk as much as possible. The first condition is that when the price is closed below the band, before that, we want a complete wave of price action. In the ideal situation, like this case here, there is an established trend where the price stayed above the band for an extended period of time. So when the price goes below the band, we can say that something is happening in the market. So we want at least one complete wave of the upside movement of the price above the band, and there should be some distance between price action and the band, showing that there was a considerable upside momentum. By having this condition, when the price goes below the band, here in T3 CCI indicator, we want the histogram to be red. If it is green, the signal is rejected, but if it is red, we continue to the next step. In this trading strategy, we are taking a conservative approach. Trading on lower time frames is risky because of higher noises that you have on the chart, and taking reversal signals like this can put you in even more risk. So to decrease our risk as much as possible, we need another confirmation before entering a position. When the price is already below the band, we wait for a pullback to the band. The pullback could be just near the band, or inside the band. All we want is having a pullback. The pullback can never happen and the price may just go down. But as I said, we want to decrease our risk as much as possible. So we wait for a pullback. We are looking for a setup like this where a pullback happens. You need to be patient and wait for a setup like this, which is a high probability setup. In the next step, we use a price action concept to enter a trade. When the pullback is formed, this sewing low here can act as a potential support level for the future price action. If a reversal is really happening and there is greater downside momentum in the market, the price should easily pass this level and go down, which you can see that it happened here by the help of this candle. This candle is closed below this level, as you can see. A price action confirmation like this helps us to say with higher probability that this break was not a false break and the price is really turning down. By the way, if you're interested to completely learn price action analysis, recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you want to take your trading to the next level. Alright, getting back to our trading setup. So in practice, we could enter a short position at this point with the stop loss above the band and the profit target at the level that makes risk to reward ratio equals 1.5. Alright, now let me show a long position setup. Here in this part of the chart, you can see that the market was in a downtrend with the price below the band for an extended period of time, which makes it a perfect situation for our setup. Even in recent price action, you can see that we had swings of the price below the band with proper distance showing downside momentum in this downtrend, and you can see that after several trying to break above the band, finally the price went above the band here. When we check T3 CCI oscillator, we can see that it is green, so we go for the next step. Now we wait for a pullback to the band. We want to be more confident that this breaking of the band is not a false breaking, so we wait for a pullback to the band. When the pullback is formed, this sewing high here can act as a potential resistance level for the future price action. If the breaking is real and the upside momentum is greater than downside momentum, the price should easily cross above this level. When the price closes above this level, which happened here by the help of this candle, the buy signal is confirmed. So in practice, we could enter a long position at this point with the stop loss below the band and profit target at 1.5 risk to reward ratio. Please pay attention that risk management is very important in scalping and day trading strategies. There is no trading strategy with 100% win rate, and losing positions are always part of the game. Especially with scalping and day trading strategies, you are exposed to more risk because of all the volatility and noises that happen on lower time frames. So to run this trading strategy successfully and profitably, you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies for scalping and day trading. I have a complete guide on this. The link is in the description and make sure you watch it later. Alright, now let me teach you the second trading strategy. In this trading strategy, we have two indicators. To add the first indicator, here we click on indicators and we search T3 ribbon, this one, which is written by just Uncle L. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. We need to change its settings. So here we go to the settings of the indicator, and here for the fast length, we set it at 11, and here for the slow length, we set it at 34. Alright, we're done with the settings of this indicator, and now we need to add the second indicator. So here again, we click on indicators and we search RSI, this one, Relative Strength Index, which is a built-in indicator on TradingView platform, and we need to change its settings. So here we go to the settings of RSI, and here for RSI length we set it at 2, and then here in the style tab for the RSI upper band, we set it at 80, and for RSI lower band, we set it at 20. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. As you can see, we have a ribbon on the price chart, and it is calculated based on T3 moving average. We're going to use this ribbon for trend identification and pullback, and then we will use RSI for identifying trade entry. Let me show how you can do it. When the ribbon is green and the price is above the ribbon, it shows that the price is advancing strongly. When the price goes inside the ribbon, it tells us that probably a pullback is forming on the chart. So we are looking for a situation like this, where the ribbon is green, the price was above the ribbon, and now the price is inside the ribbon. While the price is inside the ribbon, here in RSI, we wait for the times that RSI line goes below 20. This situation shows oversold, so turning of the price and advancing of the price is probable to happen. We wait for RSI line to close above its moving average line, this yellow line here. When RSI line is closed above its moving average line, the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. This trading setup provides early buy sell signals, so when you enter a trade, you are very near to the last swing low where we place actually our stop loss, and for the profit target we set it at the level that makes risk to reward ratio equals 2. After this trade, you can see that shortly after the price went above the ribbon, again the price went inside the ribbon, and here RSI is below 20, and at this point RSI line is closed above its moving average line, so in practice we could enter a long position at this point with the stop loss below the previous swing low and profit target at risk to reward ratio of 2. Alright, please pay attention that the price should go inside the ribbon. In cases like this, that the price action is not completely inside the ribbon, we don't take any action. Here you can see that the price again went inside the ribbon. RSI is also below 20, but before having a confirmed buy signal, you can see that the price continued declining and reaching to the lower line of the ribbon. In this situation, we don't take any action, because when this happens, it shows that the uptrend is weakening and downside momentum is gaining strength and probably becoming greater than the upside momentum. So in this situation, we don't take any action. We wait to see what happens to the trend. If it can advance again and make a higher high, or no, a reversal will happen, which is the case here. And you can see that the price turned to a downtrend, and from here, the ribbon became red. Now that the ribbon is red and the price is below the ribbon, we should look for short position opportunities. We wait for the price to completely go inside the ribbon, but not reaching the upper line of the ribbon. And when we have this situation, it tells us that probably a pullback is forming in the market, and this can provide an opportunity to enter a short position. In this situation, we want RSI line to be above 80, which means we want overbought reading of RSI, which gives the probability for downside turning of the price. We wait for RSI line to close below its moving average line, which happened here at this point. So when this candle is closed, we have a confirmed sell signal, and in practice we could enter a short position at this point with the stop loss above the previous swing high and profit target at risk to reward ratio of 2. Moving on the chart, here again you can see that the price went inside the ribbon, and here RSI is above 80, and after that here in the first shot it couldn't close below the yellow line, again went up, and then here the RSI line closed below its moving average line. If you want to take a conservative approach and decrease your risk even more, you should not take this trade, because this shows that the downside momentum wasn't so strong, and even if you check the price action, you can see that the price went flat after that before declining in a downtrend. After overbought, if we have a strong downside momentum, here in the first shot we had closing of RSI below its moving average line, exactly like our previous example here. So if you want to decrease your risk even more, you shouldn't take this trade. But if you want to take a little more risk, of course a calculated risk, when RSI line here was closed below its moving average line, in practice you could enter a short position at this point with the stop loss above the previous swing high, and you can see that this trade was also a profitable trade. Alright, moving on the chart, here you can see that the price again went inside the ribbon, but it just advanced and went above the ribbon, and at this point we got color changing of the ribbon. And here I must mention an important point that you must pay attention. From here you can see that the ribbon is green, and here the price completely went inside the ribbon, and here we got RSI line closed above the moving average line, line after being oversold. So in practice, we had a confirmed buy signal at this point, but we don't enter this trade because just a few candles before this, we had changing of the ribbon and it is too risky to enter a trade here. We want a little development of the price advancing with some distance from the ribbon showing strong momentum, and then when the price goes inside the ribbon, we look for long position opportunities, or in the case of red ribbon, short position opportunities. This is the setup that we are looking for. You can see that RSI went below 20 at this point, and here we got closing of RSI above the moving average line. So in practice, we would enter a long position at this point with the stop loss here below the previous swing low, and this is also a profitable trade, as you can see. As with any other trading strategy, risk management plays a very important role here, and you need to manage your risk properly. Otherwise, your losing positions will be out of control, and sooner or later, you will lose your trading account. 1% rule is the best risk management strategy that you can use, and it is recommended by professional traders. I have a guide on this. The link is in the description, and make sure you watch it later. Alright, now let me teach you the third trading strategy. In this trading strategy, we have two indicators. To add the first one, here we click on indicators and we search negative volume index. We add this one, which is written by H. Potter. Alright, this is the indicator, and as you can see, it's added here below the chart. First, we go to the settings of the indicator, and here in the style tab, we increase the thickness of the line so they will be better visible on our price chart. For this one, we also change the color to white so we can better see the line. Alright, this indicator is a cumulative indicator that uses volume data to determine when the smart money is active in the market, the money that is flown into the market by large and institutional traders. This red line here is MVI line, and the white line is a 255 period exponential moving average of the MVI line. Norman Fosbach created this indicator, and based on his research, when MVI line is above the 255 EMA, there is 96% chance of a bull market, but when MVI line is below its 255 EMA, there is only 53 chance of a bear market. So in this trading strategy, we only focus on bullish crossovers when MVI line is crossed above its moving average line because it provides higher probability, but we're not going to take trading decisions only based on this indicator, and there should be another indicator that will confirm the signal. For this purpose here, again, we click on indicators and we search RSI, this one, relative strength index, and we're going to use RSI with the default settings. Everything is already set on the chart, and let's see how we trade based on this trading strategy. As I mentioned earlier, we only take the bullish signals, which is when MVI line, this red line, is crossed above its 255 EMA, which is this white line. When this happened here in RSI, the RSI line should be above the center line, and it should also be above the yellow line, which is the moving average of the RSI line. But RSI line should not be above 70. In other words, it shouldn't be overbought. So when we have a bullish signal here in RSI, RSI line should be between center line and 70, and RSI line should be above its moving average line, this yellow line. So here the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. The stop loss for this trade is placed below the previous swing low, and profit target at 1.5 risk to reward ratio. Please pay attention that this trading strategy doesn't generate signals regularly because it is focused on tracking smart money, and we have signals only when cumulative volume is higher than the average in times of low volume activity. As you know, smart money enters into market in times that the market is calm and moving flat. So you can examine this trading strategy in times that the price is moving flat horizontally, or in a tightening consolidation period where the probability of entering making smart money and breakout becomes higher. Another point is that institutional traders enter with large position sizes, and sometimes shortly after the breakout, they exit their positions and the market suddenly reverses because of their large position sizes. So always watch the price action carefully, and when you see sudden turning of the price with heavy volume, it's better to close your position. And the most important point, risk management, which is the key to make consistent profit. You will never have 100% win rate, and losing positions are always part of the game, so you need to manage your risk properly. Even in the most perfect setup with many signals confirming your trade, the market condition can suddenly change, so risk management is crucial for your success. 1% rule is the best choice that can effectively help you to minimize your risk and protect your trading account. I have a complete guide on this, the link is in the description, and make sure you watch it later. Alright, now let me teach you the last trading strategy. In this trading strategy, we have two indicators. To add the first one, here we click on indicators and we search pivot point super trend. This one, which is an editor's picks indicator and written by someone named Lonesome the Blue. Alright, this is the indicator, which is a newer version of super trend that also considers pivot points. So for trend identification, it can perform better than the original super trend in some situations. When the line is above the price and red, the market is trending down and we should look for short position opportunities. And when the line is below the price and green, the market is trending up and we should look for long position opportunities. We're not going to use these buy-sell signals based on the changing point of the super trend. So we go to the settings of the indicator, and here in the inputs tab, we turn off buy-sell signals. So we will not be distracted by those signals. Now we need to add the second indicator. So here again, we click on indicators and we search Andean oscillator. This one, which is an editor's picks indicator and written by Alex Grover. Alright, this is a very powerful indicator that can also help you with times that the market is moving flat. As you can see, we have three lines here, red, orange, and green. When the red line is above the other two, the price is declining. When the green line is above the other two, the price is advancing. And when the orange line is above the other two, it tells us that the market is moving flat. This is actually our point of interest because we're going to catch declining or advancing of the price after a period of moving flat in a same direction with the current trend of the market. Let me teach you how you can find buy-sell signals based on this trading strategy. Here you can see that the super trend is red, telling us that the market is trending down, and in this situation we should look for short position opportunities. We wait for the times that the orange line is above the other two, which this situation shows flat market and consolidation period within this downtrend. In the next step, we want the red line to cross above the green line, and after that cross above the orange line. This is the exact setup that we are looking for. For example, this one, that the red line went below the orange line and then crossed above the orange line. This is not accepted. We want exactly like this, which the red line is below the other two, and then the red line crosses above the green line, and after that it crosses above the orange line. When the red line is already closed above the orange line, the sell signal is confirmed, and in practice we could enter a short position at this point when the new candle was opened. The stop loss for this trade is placed above the previous swing high and profit target at 1.5 risk to reward ratio. Alright, now let me teach you a long position setup. Here you can see that the super trend is green, telling us that the market is trending up, so we should look for long position opportunities. In this situation, we wait for the times that the orange line is above the other two, which can show flat market and consolidation period within the uptrend. And then here we want the green line to cross above the red line, and after that cross above the orange line. This is the exact setup that we are looking for. So when the green line is already closed above the orange line, the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. The stop loss for this trade is placed below the previous swing low and profit target at 1.5 0.5 risk to reward ratio. In majority of times that the market is not in a clear trend or the price is in a trading range, this trading strategy will not give you false signals. But this doesn't mean it will not give false signals at all. No, this is a trend following strategy, so it works well when the market is trending, and it will not work well when the market is not trending. So in times that the market is not trending, it is probable to have false signals. Watching the price action carefully for identifying non-trending markets is recommended, or using some indicators like ADX can help you to filter some false signals during range market, but it will be in the cost of losing also some profitable signals because another layer of filtration will be added. The most effective way is price action analysis, but as I said, you will never have 100% win rate trading strategy or anything near to this. This is not possible in trading, and losing positions are always part of the game, so you need to manage your risk properly. 1% rule is the best risk management strategy and recommended by professionals. I have a complete guide to this risk management strategy. The link is in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.